Welcome, entrepreneurs and finance enthusiasts, to Ash Allen Talks, the podcast where we dive deep into the world of entrepreneurship and finance. I'm your host, Ashkur, and I'm thrilled to have you join me on this journey of discovery, growth, and success. In each episode of Ash Allen Talks, we'll explore the intersection of entrepreneurship and finance, uncovering the strategies, insights, and stories behind building successful businesses, managing finance effectively, and navigating the ever changing landscape of the business world. Jamie, I would like to ask a question at the beginning that the current era, which is AI generated things are happening. When we compare ChatGPT, Bard, and cloud stuff and everything, how this AI is impacting on bookkeeping and the accounting field.
So I think AI has kind of already been part of the bookkeeping field. And what I mean by that, if you take something as simple as QuickBooks Online, right? When you currently upload transactions from the bank, they use AI already in the software to try to categorize the transactions beforehand, as in it tries to guess where it should be, whether it's an office expense or revenues, et cetera, based on based on other rules you set up or based on the descriptions it could see coming from the bank statements, et cetera. So there's already kind of like AI being used in the software tools already. And as time goes on, that AI will just improve. It's not amazing and it always makes a lot of mistakes right now. So at the end of the day, you still need to do like a manual review and making sure that the transactions are posted to the correct areas or at least not into, as I was going to say, not by into the wrong accounts or into the wrong categories. Now, when it comes to ChatGPT, Bard, and everything else that's coming out, it's not, well, at least bookkeeping right now. Because it's more at the end of the day, it's still like those are those are language learning models, and so because of that, it's more around like the outside bookkeeping world. So like when accountants or CFOs have to write memos or they have to respond to client requests or when you have to set up automatic emails, that's where the AI is kind of helping because you could like do first draft of those written communications. But when it comes to the actual bookkeeping, it's not there. It's just not there yet, and it's not there right now. So it's not really making a huge impact to bookkeeping, at least from what I could see. But maybe Michelle, you could give other thoughts.
No, I completely agree with you. A lot of people rely maybe too much on AI when it comes to bookkeeping, and we always tell them not to do it. And we're not saying that because, oh, we want to get your business and do your bookkeeping. It's really because they need to be super careful when they just go off by what the system says. Jamie and I have seen this over and over again. Whatever QuickBooks pops out is maybe 50% of the time it's correct, the other 50% it's wrong. So you cannot really rely on that and just go like match, done, because that's not how it works. And it's completely going to ruin your financial statements.
Mm-hmm. And Jamie, I have seen in a lot of scenarios, and I have heard that people are saying because of the AI, people will lose their jobs, especially when it's come to the accounting field and the bookkeeping stuff. The people saying, okay, everything will be automated. Why we need a bookkeeper and we will lose the job. And finally, what do you think about this trend? It's actually happening or it's a kind of a bubble created in the society?
It's fear mongering. So no, my honest. So I can understand why. So AI is always improving, and the rate that AI improves is exponential, right? It's like, and it just keeps getting like now. Recently, OpenAI has released Sora with the video generating capabilities, which is significantly more than we were last year when ChatGPT released. Or ChatGPT is like almost just over a year old. And now we're doing video, we could generate video with some prompts. So the evolution of AI is very rapid. And so are we there today? No. But can we be there 5 years from now? Probably. It could be possible. The problem with the whole we're going to lose all our jobs rhetoric that keeps kind of going out there is that it assumes that AI is perfect, and it assumes that AI could do everything 1000% correct or 100% correct. It's not there yet. Will it get there? I don't know. But there's just not enough information out there to help AI do its job. And what I mean by that is, unless the bank statements start coming in with so much more descriptions in their transactions, like some of these transactions just have numbers attached to them. So how would
Mhm.
any AI interpret what the transaction is without speaking to the actual, business owner or business manager and saying, hey, what is this transaction about? And so there's still that level of human element that's required. What I think AI will allow everyone to do is bookkeeping firms, especially, and this is just talk about bookkeeping, and then maybe we could talk about like more higher level, like in the financial chain. Is it'll make people more efficient so that you could take on more clients and take on more work. So it might not necessarily. So instead of a firm needing to hire two bookkeepers, maybe it only needs to hire one. And so is it a complete loss of jobs? Yeah, there will be some. There will definitely be some attrition, but would it be completely replaced? No, you always need some human to interact. And I think my best analogy is when you look at, like, I don't know, like if you like movies, if you look at the Marvel comics or movies, Tony Stark, like Iron Man, has an AI, right? He has Jarvis. But at the end of the day, Jarvis is this powerful AI. It could do way more than any of our AIs can do right now. And yet you still need Tony Stark. He's a genius. And so that's going to continue, right? You're still going to need the genius to Tony Stark. And especially when it comes to, you still need that human element, because there is that communication that's required with the client, the business manager, the business owner, that you're just not going to get through an AI interaction.
Mm-hmm. And
Michelle, oh,
yeah,
sorry.
Michelle, your inputs?
Yeah, no, well, I agree. But I also wanted to add that um, I think AI for now, the way we've been using it is as a helping tool. So it definitely reduces the amount of time we might spend on analyzing accounts, for example. But it's not a replacement. And the best example I can talk about is us using a tool that's called Fathom, which we use that with our fractional CFO clients. And what it does, it actually connects to QuickBooks, and it creates these beautifully designed reports with all the information that comes out of QuickBooks, and we can plug in KPIs into it, margins. It automatically calculates AR, AP. However, we do not blindly trust what we see there, because sometimes there are mistakes in QuickBooks, so you have to make sure that whatever information it extracted is actually correct. And specifically with AP and AR, it will take the information as is, whereas sometimes we if you add accruals into AP, it's going to take that into consideration, and sometimes they're not part of the calculation or should be taken out. Depends on the situation, or future payments that we're considering making, that should not be, again, part of that analysis. So the beauty of that tool is that instead of us doing all this calculation manually, and which could take us, I don't know, 10 hours, all we have to do is just make sure that the numbers in QuickBooks are correct, and then we use the software, and then in 2 minutes we get what we need. However, as I mentioned, we still need to review that and make sure that what we're seeing there makes sense and that it's correct. But that part would take us maybe an hour, for example, versus us doing everything from scratch, right? So it's not taking away our job, but it definitely minimizes the amount of effort we need to put into that.
Yeah,
Mm-hmm.
it's going to allow us to scale more, right? And I think the biggest issue, and now let's talk about CFO as well, right? Because there's bookkeeping, and then there's controllership and like management and CFO type of level tasks. As you get more higher level of the organization, it becomes more about strategy and more about
Yeah.
controls and mitigating risk and everything else that's not really about bookkeeping. And that is where you definitely we see some current help. Like right now, AI is helping us be more efficient, right? It allows us to, write memos faster. It allows us to put our thoughts, make sure to validate some of our thoughts if we're trying to determine a course of action, or make sure that we've thought of all the options, etc. So when it comes to that right now, yes, there's definitely help. And that's what we're seeing, where AI is definitely a much more important tool, and it's going to get better, right? When you look at Microsoft Copilot as well, and you see what they're trying to do with the Office integration, right, where you could do PowerPoint slides, based on your AI searches and Word memos and Excel spreadsheets. We're not there yet. I don't know if you tried Copilot, but it's not. It's probably better on the PowerPoint side, but the Excel side, it couldn't do anything with the data. It doesn't do as much of the data as I give it. But once that gets to where Microsoft wants it to be, and once Bard or whatever the new Google thing is calling it, gets to where they want it to be, and you can actually start drafting things from scratch based on thoughts and ideas, that's when it's really going to take, we're going to see that leap in efficiency and productivity. And for us, especially, what that's going to mean is that instead of me maybe saying I can only take on 4 or 5 clients at a time, maybe now I could take 7, 8 clients at a time. And that's going to allow us to scale. And as we scale, we get more, obviously more profits. And then hopefully we can invest those profits in other tools and other resources. So I think that's where it's definitely going to happen. And I think, is it going to take away all the jobs? No. But is it going to take away some jobs or shift some jobs? For sure, right? There's definitely going to be something there, because before, if we wanted to scale past 4 clients, we need to hire somebody else. Maybe in 2 or 3 years, we won't have to, because AI is going to allow us to be more efficient. And so that job will be gone, right? So there is, to say no jobs will be replaced would be incorrect. But to say all the jobs will be replaced as well is also incorrect, because you still need that human element. So that's kind of how, that's where AI is going right now. But, in 3 years, the evolution might be even way more than we think it is today. And I might be saying something different, right? It changes so fast.
Yep, true. And Jamie, when it's come to the practical scenarios, when it's come to, top position in a hierarchy, so the ratio analysis is a very important and crucial role. So people analyzing the financial data by ratios, especially profit-oriented or stock keeping, or when it's come to other, and it's many ratios are there, even profitability, and the things are sometimes it getting worse. And I have seen some entrepreneurs and the business owners, they have personally talked with me. They are saying this ratio analysis is very hard, even for their accountants who are working under them, even for themselves. It's hard to understand why it is tricky, or why it's like that.
So without knowing the full context of the people you talk to, I could only guess what they're referring to, or assume based on my own work with the ratios. And I don't think it's actually calculating the ratios that's tough. I think it's the interpretation of the ratios that happens incorrectly more often, or it's harder for people to understand. Because a lot of the ratios, most of the accounting softwares, and like for example the tool that Michelle mentioned, Fathom, they just pump out all the ratios for you. You have all the data, boom, 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 boom. You can have 100 ratios if you really wanted to. That's not the hard part. The hard part then is, what do you do with those ratios, right? Like, what does it actually all mean, and how do you interpret it? And that is, I think, is where a lot of people have trouble. And to be honest, that's something more where AI can actually may help, is like, hey, what does these ratios mean? And gives you its analysis, or at least an initial analysis. But at the end of the day, that comes with experience. It comes with knowing your business. It comes with knowing the industry you're working in. It comes to knowing the historical trends of the business that you're looking at, and also your goals. Well, what is your strategy? What are your goals and your objectives and your KPIs that you're trying to hit? And are these ratios moving in the right direction based on all of those things? So it's kind of like the overall view. You have to take that holistic view. And someone much junior, it's much harder for them to do, because they don't have all that context. They don't have all the information. And so sometimes, more seniors get frustrated maybe when the juniors don't know how to do it. But it's not really their fault, because they just don't have all the information to do it, or the experience and the knowledge that the senior does. And so that's why it's always something best at the end of the day when it comes to any type of analysis or performance management. You always need that person who has all the information, all the context, to be able to provide their analysis and kind of cut through the noise, right? Because there's always a few key ratios, a few key KPIs, as you say, that actually matter, that move the needle for the business. So being able to just cut through the 100 and be like, hey, these are the 8 that matter. Are they moving in the right direction? That is where it's a little bit more of an art than a science sometimes. And, it's harder to pass down and to get that from juniors who might not have as much experience, who might not understand what the plan of the business in, where it's going, or where it's been. And so it takes them a lot longer to onboard. But eventually they get there.
Michelle?
Yeah, I completely agree. And I think the main pain point that I've noticed with business owners when they do have accounting team on site is that it's it's very challenging most of the times for accountants to explain what they're seeing. They understand what it is, but they don't know how to communicate that. So I think that's where the main issue is. It's trying to communicate what you're seeing, and explaining that in layman words that make sense to the business owner. If I had to sum it up, this is where I would go with that.
And where ChatGPT actually helps, it does, or like an AI helps
True.
because they have all these ratios. Help me explain it, and I mean, sometimes it gives you at least 70-80% there, but it gets you a good head start to at least be able to communicate what it means.
Yeah. And Jamie, when we comparing a person who is, I mean, an entrepreneur who is coming into the market from the zero to $100,000, so at
Mhm.
what point he or she should hire a accountant to the company?
Okay, so let's break it down into two. At one point, should they hire a bookkeeper is one question. At one point, should they hire like a fractional CFO is another question and another timeline. So let's talk about both separately. A bookkeeper should be hired always as soon as you can. As soon as you can afford a bookkeeper, you should. And the reasons are, I'll give two good reasons, and then I'll move on to the CFO, and I'm sure Michelle can add some reasons as well. One, it's because you want to minimize errors. So if you have a really good bookkeeper, you'll minimize errors, and then you don't have to worry about cleanup and anything after the fact, which is always so much. So you'll save money in the long in the short term, really, because if you're going from 0 to 100K in like a year, by the time you get to that end of the year, you're gonna have a huge cleanup that you have to deal with, and it's gonna cost you more versus just hiring a bookkeeper to do it more often. Now, are you gonna hire that bookkeeper on day one? Probably not. You're gonna wait till you get your first sales until you start getting some cash flow, and then when you could afford the bookkeeper, you should. It should be one of your key hires as part of your team, right? And part time, right? You don't hire a bookkeeper full time. You hire like a firm or someone part time to do it. The second reason is because it saves you, the owner, time from spending, unless you're a bookkeeper by nature and by trade and you know how to do bookkeeping, or you're an accountant, you're going to spend so much time understanding how to do bookkeeping and then do it sometimes wrong when you could use that time to grow the business. So why wouldn't you use that time to grow your business, to focus on strategy, or to focus on what you're actually good at, whether it's sales, whether it's marketing, whether it's operations. Focus your time on what you're actually good at, where you're going to get the most value, the most bang for your buck, and let the bookkeeper do the bookkeeping. It's admin work at the end of the day. Just let someone knows what they're doing, do it, and focus on the time that matters. So always recommend a bookkeeper as soon as you can afford it. Now, a CFO is a little different because CFO is about strategy. CFO is about implementing discipline into the process. How do we look at objectives? How do we hit our goals next year? How do we track them? How do we, what's the performance management we're going to use? Like, what are the KPIs? How often are we going to review things? What are the risks of the business? How are we going to mitigate them? What's our tax strategies? All these things are all like what a CFO worries about, like, and leadership, etc. Well, when you're small, all those problems are not as big. It's easier to manage as an owner. As you start getting bigger, and you kind of want to look at it as maybe over 100,000, probably around 200 to 300,000 in revenues. We like to say 500K, to be honest, is when
Yeah.
that's when you should really start looking for a CFO, because now you have enough transactions, you have enough revenues, you have enough that's going on in the business, where the way you go from 500 to a million and a million to like 10 million is where a CFO could help you take those steps, because they could add that discipline to the process. They could help you with your performance management. They could help you mitigate risks that you haven't been mitigating. They could help you with your tax strategies so you could be more efficient. They can help you with your reporting so you actually know what your business is doing and where you're going. They can help you with the cash flow forecasting, right? Make sure that that you're forecasting your cash needs correctly. They can help you with, if you have to get lenders, if you have to get investors, a good CFO will help you do all that stuff. Will help you get those investors, help you get those lenders, provide them with reports that they could read, that they can understand, etc. So if you want to grow that business, if you want to level up your business, that's where a CFO comes in. So up until like 0 to 500K, a bookkeeper, and if you want an accounting firm, or a typical bookkeeping firm would have the bookkeeper plus, like, for example, me or Michelle. Although we're not CFOs, we can still give some advice on a monthly. Here are the numbers. This is what they kind of look at, but you don't need like a true CFO. But once you hit that 500K, you should really look to see if you could hire a fractional CFO to help you with help you take that business to the next step, to the next level.
Mm-hmm.
Right,
And yeah, Jamie, when it comes to the manufacturing organization, so the stock keeping and maintaining the stock, it's pretty complex. I mean, the opening inventory, closing inventory, reorder levels, and the losses and impairment, and you need to adjust everything. So this particularly the inventory part is a burden for the entrepreneurs. So sometimes they might hire a special person for inventory or accountant. So how to categorize this point from a business part of view?
Inventory at the end of the day is still part of bookkeeping. A good bookkeeper would know, like, and maybe not a bookkeeper. I guess the phrase is the bookkeeping firm would have someone in the firm who could actually do it. So like it's more like an accountant.
Yeah.
It's not a fractional CFO who would do the inventory, although they can. But in terms of inventory management, if we're talking about the same levels of revenue, like a business running, 500,000 to 1 million, then it would be the CFO working with probably someone internally at the firm to help them understand what's going on with inventory, to manage the process, to implement the controls, to determine, to help with the valuation of the inventory and understanding what the balance is and what the cost of goods sold are, et cetera. So that's where a fractional CFO would work with the maybe someone internally who was in operations and doing the actual inventory management, like from an operations perspective, and working with the bookkeeper that they have on hand to make sure everything is correctly all the costs are correctly in the system. With a business that's less, like 500K or less in revenues, and they're not really hiring a CFO, that's when they if they really need someone to help with the inventory, then they need to, that there is like some firms would offer what they call a controller, fractional controller or accounting type of service. And we do too, but it's just not as heavily advertised. And that's where it's not as expensive and not as high level as what a CFO does. And you kind of get in there just to help. So like you could come in and just help with inventory, and inventory management, let's say, and other things that you may not want to pay for a full-time or a fractional CFO, but you'll pay for someone to come do it to help you with those specific accounting problems. And that is always, beneficial to the owner, as you say, because they're not bogged down by all that time that it takes to get it up and running and managed and properly recorded. And they can focus on other things of the business. So there is most firms do offer like that interim step between bookkeeping and CFO. And you just have to, inquire. Michelle, what are your thoughts?
Yeah, I agree. I just think that when it comes to inventory, it can get extremely messy, even when it's a small company. So I would say whoever you do end up hiring as a bookkeeper, just make sure they do have experience with managing inventory, because that number can get you in trouble if it's mismanaged. So just make sure that whoever does it has the expertise and knowledge and understanding to do this the right way.
Yeah, when it comes to inventory management, we've seen some disasters in our experience. And the disaster is not because they didn't have a bookkeeper who knew how to do it, or because they didn't have a firm or an accountant who could do it. The reason why there's always disasters is the setup. The initial setup was just wrong. And because the initial setup wasn't either complete or fully done correct, or done in a way to capture all that information correctly, then it becomes such an exercise to clean it up that it becomes this monumental task that it doesn't need to be. And so it feels very complicated. It feels very intensive to the owner, like, oh, this is a mess. But it's only a mess because you set it up wrong. And so what I would recommend for any entrepreneur or any business owner who's starting, and you have an inventory intensive business, you're better off getting an expert and finding an accounting firm or CFO firm, et cetera, to help you set it up at the beginning. So then you don't need them for a while. They come in for the initial setup. This is the software you should, maybe you have to implement some certain software, some certain processes in place, an inventory count, this, that, templates, et cetera. Have all that set up. And then obviously you need to have the discipline to follow through on all those things afterwards. But that is what will save you so much effort and headache in the beginning, so that when you get to somewhere where you're making like 500K, $1 million, it doesn't seem like this huge task. It might break because now you're making more. And now obviously as your business grows, things always break along the way. But at least it'll be in a much better spot versus like, where we see it, where it's just it wasn't even close to being set up correctly. And it's such a retrospective mess to try to clean it up that it seems like then you need to bring in someone like us, and then it just ends up costing way more than it needs to be versus if it was just set up correctly at the beginning.
And Jamie, when it's come to the entrepreneurship, so if it's a listed company, it's fine. We can compare our financial statement with the publicly listed company's financial statements. But the entrepreneurs are like a small and medium enterprises. So how they will compare their financial statement with what, and how they can come to a conclusion, okay, I am going on a right path with the strategies and the KPIs and the ratios analysis. So I mean, they have the resources only themselves. They cannot compare their own financial books with someone else outside, maybe a competitor or someone else. So at this point, how we can derive that we are going in a right track and we are achieving our goals?
So and just to clarify, and this is a scenario where maybe there aren't good public comparables to use, correct?
Yeah.
Yeah. So this is actually very common. And it's not as, especially when you're doing something different, something new, you may not know how to compare. But there should always be some type of proxy. There's usually a proxy available that you could at least look at and determine whether or not, it's close enough to your industry or business. And for example, I like to give you an example. So one one of my experiences in the cannabis industry. And so cannabis is new, right? Brand new industry, never really existed as a legal company, legal basis before. And so everyone is trying to figure out what they were trying to do for the first time. And until some public companies went out there and started posting their results, we had to figure things out on our own. And so we started looking for proxies. So you would look at maybe the alcohol space. You would look at other manufacturing, right? Because at the end of the day, it's still manufacturing. It's just done with agriculture, et cetera. So we try to look at different proxies and say, okay, like other capital intensive businesses, other businesses running similar, and try to at least look at that as some sort of benchmark. Because it's always good to have some sort of benchmark. However, at the end of the day, if you're doing a startup and you're doing an entrepreneur and you're doing your own company, benchmarks are good. And another way to get benchmarks, if you can't find them through public companies, is to look for investors in your space. Now, investors in your space are going to have their own benchmarks in their mind. Venture capitalists, right? Especially venture capitalists, they might look at your business and be like, oh, they're going to look at it as like this type of business. And so if you could find venture capitalists that might invest in companies that you're doing, in the industry you're in, they usually do a lot of posts, they do articles. Sometimes you could talk to them, give them a call, ask for a coffee and see what metrics do they look at? What are they looking for when they're investing in a company? If that's your goal, if your goal is to eventually raise, outside funds. So that's another way that will give you some type of benchmark to say, oh, well, venture capitalists are going to want me to grow 2x. So I got to make sure I grow 2x or they're not going to even bother to look at me. So there's proxy industries. There's who's going to invest in you and give you the money. What are they looking at? And then the third thing is your strategy and goals. What are your strategy and goals and what are you trying to achieve? Because at the end of the day, you need to compare yourself to yourself as well, right? It's no different than when you're trying to lose weight. If I'm trying to lose 20 pounds, who cares what Arnold Schwarzenegger is doing? As much as at the end of the day, I have to lose 20 pounds. I need to know what I'm doing differently. Am I doing what I'm supposed to be doing to get to lose my 20 pounds? And I could look at all the fitness trainers in the world and all the fitness influencers. And at the end of the day, it's only a proxy. It's only a benchmark, but I still have to know what I'm doing, I have my own injuries, I have my own genes, I have my own things to compare to. And that's the same thing with the business. Your strategy, your goals and objectives, what you want to do as the owner, as the entrepreneur, what you're trying to achieve, that has to be taken from words and concepts into a financial plan, into KPIs that you track, and then you track against those. So you have three sets of benchmarks. You have your own goals, you have your what investors might want, and you have proxies. And through the combination of those, it should give you a pretty good picture if you're heading in the right direction.
Mm-hmm.
Michelle? Sorry, I think we lost you at one point.
Yeah, I'm sorry. It's my internet connection. I apologize. So I heard what you were talking about now, but I didn't hear the question.
Oh, it was about how do companies benchmark, like, or how do they, when they don't have other public
Yeah.
companies to look at in terms of their financials, how do they know if they're doing, like, a good job or going towards their goals?
Yeah. Yeah. And it's funny because we literally just talked with a client about that
Yes.
specific question.
Yeah.
Yeah.
And Jamie, I would like to ask one more question regarding manufacturing organizations. So
Mhm.
right now, people are going behind the brands. Let's say, for an example, Apple Incorporation. We're seeing Apple. So we don't see where it's manufactured. Actually, it's from China. So the business model is changing slightly. They do not manufacture actually in a mainland. They're importing from China by the customized how they want it. So at this point, the production cost might be lower, but the transportation and the marketing this getting higher. So this kind of business model, how it will be vary from a classical manufacturing organizations.
Yeah. So in terms of the manufacturing space, I don't know if I would say it's changing now. I think it's been changed for quite some time. Or we've been seeing it for the past few years, um, especially when e-commerce started to become a much bigger thing than it was, which is the companies in the US and Canada and North America are becoming more of marketing companies or branding companies than they are manufacturers, even though they sell goods, and or consumer packaged goods. All that is manufactured in somewhere else. Let's take Kim Kardashian, right? Her Skims line. Her main manufacturers in and if I wanted to get the exact same, product, I could go to the same manufacturer in Turkey. I know who it is. You could find it online, and and pretty much get the same SKU or same product, maybe a little different. And then
Yeah.
all I have to do is, I change the brand and I could sell it. Now, is it going to do as well as Skims? Is it going to do as well? No, probably not, because I don't have the same branding and I don't have the same brand power that Skims currently have. And so as you try to look for, can manufacturing in the US and Canada compete, or North America compete with lower cost manufacturing in China, Turkey, Bangladesh, etc. That is, has been the globalization topic that MBAs talk about for years now. And I think that's never going to change. It's just going to get worse as the world is increasingly getting smaller from a globalization. It's not getting bigger. It's not getting harder. It's getting easier
True.
to
True.
buy things from across the world. And so I think everyone has to figure out where, in the value chain they are and where they can really add value. And, for a lot of companies, if you're not in Turkey manufacturing, then you're a branding company, you're a marketing company. And how do you effectively, or the design, you have some unique designs that you try to patent, but that's really hard to do as well. So it's really about maybe the design, the branding, and the marketing. And marketing, when you define it, is really providing customers with what they want, right? It's determining what customers want and giving it to them. So knowing how to do that really well and then translating that to a low cost manufacturer so that you could provide it at the cost, at the price that customers will pay, is at the end of the day what you're supposed to do as a business. And so I think that's just going to get easier. It's going to get more, it's going to be simpler. There's a lot of companies out there that are trying to simplify the process. There's a company right now, Pietra. At least they were a couple of years ago. They were basically a platform for startups, right? You join on their site and you could literally see hundreds of manufacturers across the world, and you could place a sample order. You could place an order, and based on the different samples you're trying to do, and just slap your brand and your white label,
Yeah.
right, private label it, etc.
Yeah.
So more of these platforms are going to pop out to try to make it easier for entrepreneurs and startups to be able to compete against the bigger players. And I think that's pretty exciting to see as the world, it just becomes easier and easier to start a business as time goes on. It doesn't become harder, right? Like Shopify made it easier to start an online store. And these other platforms are going to make it easier to buy things from overseas. And chat and AI is making it easier to come up with copy and all. So things are just getting, no code, build websites using no code and AI. So things are just getting easier and easier to start a business. So it's really what's going to make you different, what's your strategy, and what are you providing to customers that they actually want, right? Make something that customers want, the adage. So I think that at the end of the day is going to be the key: is are you making something that customers want? Are you selling, communicating it to them in the way that they want it and at the price that they want to buy it? If you're doing all those three things correctly and you have a good low cost manufacturer, then you have a good chance. Then you have a good chance. But if you're not thinking of, if you're just trying to beat them on cost, you're going to lose, right?
Mm,
It's going
yeah,
to be harder.
true,
It's going
true.
to be harder to win.
Yeah. Michelle, your thoughts on it?
I actually don't have anything to add. I agree with Jamie on this. It is getting easier. That's the
Yeah, he's
trend.
spot on. Yeah, that's what's happening actually. The manufacturing industries are changing and it's going to shifting to lower manufacturing cost countries and it's coming to the mainland and the tariff and the marketing stuff. Yeah, actually people trying to build the
Yeah,
brand name. So people coming behind it. Yeah, it's true. And
exactly.
Jamie, there are people watching who are watching this. I mean, all our entrepreneurs, the leaders, future leaders, and the people who are listening to this podcast is most into the business side and the investors. So, what is your advice for the people who are watching this?
So my advice is one, if you're starting, like, like if you're starting a business, try to like at the end of the day, you could spend all day, all night researching, consuming content, and figuring things out. But until you start, you haven't started. And so with most businesses, you could test and start very cheap nowadays and very cost effective. Sorry, not cheap, cost effective, right? You could build a simple website with not that much of investment. You could use either no code or AI, or you could find someone on Fiverr to do it, right? Or somewhere similar. You could try, you could try finding a product from overseas, etc. Like you could do all these different things, and you should start. You should start and try and get out there because your what your customer wants, you don't really know at the beginning. You only have an idea of what your customer actually wants, but you don't actually know until you get product out there and you start getting feedback on what customer wants. And as you get that feedback, you start to modify. And so before investing all of your money on a product that you think is going to be an amazing product, it's probably not going to be. That's like the hard truth until it gets into the customer's hands and you get that feedback. And at the end of the day, a winning product doesn't make a winning business. Um, the difference between a first time entrepreneur, a second time entrepreneur, and a third time is what they focus on when they're trying to grow the business. A first time entrepreneur will focus on creating the best product, but it doesn't sell itself. The second time entrepreneur will
No.
focus on distribution. How do you get your product into the most hands as possible, right? And so focus on, that is how are you going to how are you actually going to sell and distribute your product? You have contracts with wholesalers, distributors. Is it through e-commerce? What makes you different? How are you going to be able to sell? The distribution, the marketing of it. And the third is having systems in place, right? You need to have systems in place to try to automate what you're trying to do to make it easy, to make it a business. So it's not just you and you're buying yourself a job. So if you're trying to start, first of all, get started. Stop waiting and just get started. Second thing is don't focus too much time on your product because whatever you think the right product is, it probably isn't. Get feedback from your customers and then modify, improve, improve, improve. And then the third thing is, you want to make sure you focus on how you're going to scale and how you're going to distribute your product to as many people as you can, because that's exactly what's going to get you to the next level. And then the last thing is make sure you know your numbers. And I know I'm biased because I'm a fractional CFO, but making sure you know your numbers is important because running out of cash is the number one reason why businesses die, right? It's literally that's it. You die because you ran out of cash. And
True,
it's
true.
so easy when you don't know your numbers. You don't have the right numbers, so you think you have more money than you do, dead. You know, so let's go back to, advice for, entrepreneurs and startups. At the end of the day, one is to start, right? The faster you start, the more you'll start getting feedback from customers and what's going on because you're not going to get it right the first time. Two, focusing on product is not going to grow your business. Distribution, marketing, and how you're going to get it, the channels you're selling it, that's what's going to grow and actually going to get get the sales that you're looking for. So don't just focus on the product. You got to focus on distribution. Three is what I would say is knowing your numbers, right? Going back to knowing your numbers. And the reason why is because you don't want to run out of cash. If you run out of cash, your business is dead. And it's very easy to do when you don't know your numbers. And not knowing your numbers doesn't just mean what did you do? Like, how was my results last month? Knowing your numbers means what is your forecast also for the next 12 months? How much cash do you have? How many expenses what are your expenses going to be for the next 6 months, 12 months, etc.? When are you going to get the sales in? Be realistic with your sales numbers. And then also the key that everyone always messes up is do not forget about the difference in cash flow versus anything else, right? Cash coming in is not always the same as when your cash has to go out. So knowing those differences that lag is what they call the cash conversion cycle. Knowing your cash conversion cycle is important to make sure you don't run out of money, so you don't let your business die. So, try to get cash as fast as possible from your customers and try to pay out your suppliers as late as possible as you can, right? That's the key, but it makes a difference. Know what your business is. Every business has some are very easy. For example, drop shipping, you don't pay until you make a sale. That's easy. If you're a manufacturer, you got to buy product, or a retailer, you got to buy some product sometimes first and have it in your store, and then you sell it. So how do you manage that cash flow? That is what I mean by knowing your numbers, knowing when your cash comes in, when it has to go out, and how much cash you actually need to survive, and track it so you don't run out of cash prematurely. And that's what I would give. That's where I would end it off in terms of advice for entrepreneurs who are starting today. Michelle, what are your thoughts?
Yeah, similar. Nothing really to add on top of that. Um, I the only thing I did want to mention is not necessarily related to that directly, maybe indirectly. Just to kind of talk a little bit about the role of the fractional CFO, because first of all, not all business owners understand what a fractional CFO is. That's number one. The second thing is that they don't understand the actual scope of work because it is very, very wide. And a lot of business owners are looking for business coaches or mentors. And I feel like the CFO, the fractional CFO, kind of really encompasses some of these traits from a business coaching perspective. But we actually bring more value in the sense that we understand the numbers. And ultimately, everything comes from the books and the way the business manages itself. So it's kind of like this giant umbrella that we provide to businesses. So we bring in our value in understanding the numbers, how to interpret the numbers, and also how to progress from here and get from point A to B. What are the tools that they need to implement? So a lot of the times I think that it's actually even worthwhile investing more into a fractional CFO versus just bringing an accountant that sees you once a year and does your taxes, and then invest I don't know how much in business coaches who are not always what the business actually needs, and you would get more from a fractional CFO.
At the end of the day, I'm going to quote, the great Warren Buffett. He said, accounting is the language of business. And he's right. If you want to understand a business and you want to speak the language, you have to understand the numbers. And that's what he really means, right? The accounting and the numbers tells you everything. Like, I could look at a business's financial statements, compare it to last month or a year, and I know the story. I know what's happening, and I know what's going on because I understand the numbers and the language of business so well. And so with those insights, with that experience, we can help other businesses understand their business. It's easier for us to get on board. It's easier for us to see what your problems are. It's easier for us to hone in on, hey, you really need to fix this if you want to continue, if you want to be, successful. And that's where the value comes into. Plus all the extra stuff that Michelle mentioned of the leadership and be able to coach and all that stuff and add discipline and help with strategy. But accounting is the language of business. So
yeah.
Wow, those are golden words and golden rules. The people who are listening to the podcast, yep, mark my words. And yeah, we have discussed more about the business and the investment and the AI technologies coming in, how the bookkeeping will work, and how strategic planning and the KPIs, ratio analysis, and a lot of angles. We have discussed the business and the things who are coming into the market, and they can get a good knowledge on it. And I hope so. And thank you very much, Jaime and Michelle, for joining with me.
thank you for having us.